Ladies and gentlemen, welcome to another episode of Echale podcast. My name is Jose Quintero. These masterclasses, I hope you've been enjoying them for finance and investing. There's 2 other episodes that are already out with
Eddie, the hustler.
Yeah, that's his Instagram handle, so you guys can go ahead and check him out if you haven't. But this is a whole new episode, and today we're going to talk about banks because I feel like that's an important topic, and nobody's telling you que los pinches bancos te están robando, güey, no te das cuenta.
Yep.
Like, all right, so we're going to go ahead and discuss big banks, small banks, stick around, interest rates, how they affect you, saving, where to save your money, what to do with your savings account, etc. All right, so we're going to go ahead and start it. And the 3 big banks out there.
So right now, the 3 big banks, right, it's Chase, Bank of America, and Wells Fargo. Mm-hmm. Right, everyone pretty much uses those banks. I'm pretty
They're like
sure.
your starter Pokemon.
Yeah, I have Chase. I mean, I use it as my main account to pay my bills. But as far as like your savings, you shouldn't have your money in any of those, right?
No.
Especially right now, since interest rates are high, like you could be making money with other banks.
Oh,
right?
I'm just gonna do this whole reference because literally, as I said, it was my 3 starter Pokemon.
Yeah.
Like, you know, like, well, I mean, you watch Pokemon, right? Or you watch? All right, cool. So you got like your Wells Fargo, your Chase, and your Bank of America. Which one are you starting with? That's up to you to decide, right? Like, what do you like best? And then, but if they offered you like a Dragonite or a freaking Mew, you're like, ooh, well, this Pokemon, right? Like, this Pokemon's going to do a lot more for me. Yeah. So that's literally what smaller banks are, or what these other banks, they have different benefits. Obviously, the benefit that these bigger banks have is that they're not going to go bankrupt, which we've seen with...
Yeah, I think it was Silicon Valley Bank.
Yeah.
Like, there's a lot of banks that went out, that went under, right?
Or bought out. We saw it even with Chase. It was JP Morgan? Well, no,
Washington Mutual.
Washington Mutual. Yeah, and then it got bought off by JP Morgan.
I remember in elementary, I used to have Washington Mutual, and I used to go to school and deposit some money into it.
Oh, shit. So I never had a bank account.
Yeah. But, yeah, man, when it comes to these like, big banks, the good thing is that they're everywhere, right? Mm-hmm. So if you need money, I'm pretty sure there's a Chase somewhere, Wells Fargo. That's the beauty of it. But when it comes to, like, saving your money... you want to have it somewhere else, right? Because like how we said on the previous episode, out of sight, out of mind, that's how you're really going to save and have that extra money to invest or down payment on a house, whatever you want to use it for.
So I'm like, okay, well, Eddie and Jose said out of sight, out of mind. I should have another bank. So should I open up a Chase and a Wells Fargo?
Nah.
That's
so
not the smart.
The thing that...
You can't go back to Professor Oak and ask for another Pokemon.
You got to do a little bit more research, right? Start looking into other banks. You know, some of these other banks, people might not know about it because they're not like a Chase. They're not everywhere, right? Mm-hmm. Some of them are completely online, right? So the good thing about that is that there's less fees, there's less minimum requirements, things like that. So if you get like a lot of overdraft fees or anything like that, all that stuff is eating your money away. With these other banks, a lot of times they will cancel the transaction or whatever. And then there's usually like no fee. Just call them up and they'll take care of it.
So before we go ahead and start into interest rates, which bank accounts that you guys should like look into, let's talk about, because I want to go into like this whole process of growing up. One of the things that as soon as you turn 18, you get a bank account, or maybe if you're younger and your parents started putting a bank account like a Wells Fargo, Chase, or Bank of America, but a credit card, you're trying to get a credit card and they're not approving you for a credit card.
Yeah. So one thing that I actually did is, you know, I have pretty good credit, and my little brother, right, when he was, I want to say like 15 or 13, I actually added him as an authorized user to my account.
All the parents listen to this.
This is that generational wealth too.
Yeah, or if you have a younger sibling.
Yep.
Yeah, this is good information.
So basically what I was doing, because I was researching, you know, just reading, and then I heard about authorized users. So at the time I had like a pretty good credit score, and then I was just thinking about my little brother. You know, I was like, dang, you know, once he grows up, I would want him to have good credit. That way, if he wants to get a car or like get out a loan, a business loan, whatever he wants to do. He already has history, and it's easier because imagine going somewhere where you don't have any history, especially
Literally.
at 18.
Literally all of us.
Yeah.
I try to get a which is funny. I try to get a Best Buy account, and they're like, "Oh, well, you don't have any credit, so
Yeah.
you got denied." And I'm like, "So you ran my credit, which one that affects your
Yup.
credit, and then I didn't have any credit, and I wasn't approved. How the hell do you want me to start getting credit?"
Yeah.
And obviously, my dad had to become an authorized user at La Curacao. That was my very first credit card.
Oh,
and
yeah?
I got a camera. But my dad was my authorized user. But imagine an 18-year-old, like, what if they didn't have a parent to be an authorized user? You'd have to ask a friend.
Yeah,
Y todo ese rollo.
and a lot of times that's kind of risky too, because like you don't know how they're gonna use it, right? You're attached to their credit, so if they, I don't know, max it out one day or
Yeah.
something, it's gonna impact you.
Question:
But,
as an authorized user, does that mean he had a card, or you just had him as an authorized user, never gave him a credit card?
no, he has a card. So like how I mentioned in earlier episodes, I added him onto an authorized user, and it came with the card. And once he got that card, I gave it to him, and I was teaching him how to read, the credit statements, how to use credit. So I started him already that way. Once he has it, he already has a little bit more knowledge on how to use it. That way he's not out there like, oh, shoot, I got $1,000. I'm going to just swipe.
Yeah.
And so I just explained to him how it worked. But yeah, you could you can have an authorized user, right, with any of your credit cards. But the key is not all credit cards report them to all 3 credit bureaus. That's one thing that I was looking for. Or that report to any credit bureau. So the one that I added him as an authorized user was to my Discover card, my Discover It card. I added him to that one because they report to 2 credit bureaus. I think it's Experian and I think TransUnion. I think it was those 2, right? So when I added him, all my history is getting transferred onto him. So once he's 18, he has like 5 years of experience.
Exactly. And that's a big thing because the biggest thing that affects your credit score is the life
Yep.
of your credit history. And you can already add an authorized user like as a child or
Yep.
a sibling at the age of 13.
Yeah.
FYI. So if you have somebody that's just turning 13 or a teenager, add them as an authorized user. You don't necessarily have to give them a credit card. You can start already teaching them how to read the statements and how to manage a credit card. But as long as you have them as an authorized user, by the time they turn 18, they already have 5 years of history. 5 years of history is really good.
Yeah. And it takes a while. Like even now, like just to build up your credit score to where it's at, it takes time. So imagine all that time you're doing good with your credit, you could pass that on to someone else and, give them an advantage to where they start, right? And that generational wealth that we always mention, I would want my siblings and, my future kids to advance and keep progressing,
Yeah. Yeah. All right, cool. Now that we did that little tangent about credit cards, because I think it's important because these big banks, they do offer that. And they do offer a little bit more sense of security because I'm not sure, are most banks FDIC insured?
Most of them are, they should be. And basically what that is like if kind of like Silicon Valley Bank, if it were to go down, right? Like, hey, this bank is shutting down. Your funds, the cash that you have in there is actually backed, right? It's like insurance for your money. So it's up to $250,000 per individual.
Yeah.
So it's
If you
always
have
good
more,
to have that.
That's
Yeah.
not like you're fucking screwed on the rest of them.
Yeah,
You have
exactly.
$300,000 in there, you're only going to get $250,000 back.
Yep.
Yeah. All right. We talked about the 3 big banks. They're good. They're a good way to start. They're a good way, like you said. I also have, when I get direct deposits, it goes into my Wells Fargo account.
Yeah.
But then I have the automation system, which we've talked about in episodes 1 and 2. And I tell my money where to go on either a weekly or a monthly basis. And one of those automations is to a high yield savings account.
Yep.
Which there's different kinds. But what is a high yield savings account versus a savings account?
Yeah. A high yield savings account is basically the main thing with that account is to give you a high yield, right? It's to give you a high interest rate on your money. So you have your money parked there, but at the same time, you're generating more interest, right? So they're paying you a bigger percentage. Now, in order to get a high yield savings account, it's going to be kind of like at a different bank. I don't think Chase, Wells Fargo, like they just have regular savings accounts.
Yeah.
None of them are like high yield.
But they don't tell you this. They don't tell you this.
Nope.
They say like, hey, this is a savings account. I literally went on Wells Fargo. If you want to sponsor me, Wells Fargo, please do so. I'm just saying. But they say like, oh, we have really good interest rates, the best there are in the market. Like you're going to earn money just by leaving it there. They're not lying to you, but they're also tricking you.
Yep.
So how are they not lying to you?
So you are going to earn interest. But their interest rates, it's like the worst, right? So there's like, it's not even 1% interest, especially right now. Interest rates are high, right?
You're paying it.
Yep.
You're paying it. The cost of living has gone up. The cost of food has gone up, and
Gas,
so many
all that
people
stuff.
are asking like, why is food up? Well, first of all, if food is importing, let's say importing, well, that means people are bringing something from out of the country, gas being one of them, or oil, that is taxed at a higher rate. So if gas is taxed at a higher rate, that means your gas is going to go up because the businesses don't want to make for it. Okay, but gas is going up. How does that affect my food? The drivers who take your food from point A to point B have to spend gas. So that means that company is not going to take a profit loss on it. They're going to charge it back to the consumer.
Yep, that's us.
That's us.
That's a good analogy and stuff.
Yeah, sorry. I had to go on a tangent. Okay, so interest rates, big banks. What are they giving me? Hey.
The big banks, they're giving you less than like 1%. It's probably 0.01%, 0.15%. Like it's nothing.
Yeah,
it's like
0.15%. And so many people are being tricked. And I don't want to say tricked. They're not being tricked. They're being misinformed. And that's why we're here. Like, hey, put your money in this savings account. And so many people sometimes pull their retirement money and put it in a savings account, or get a lump sum of money and put it in a savings account, whether it be Wells Fargo, Bank of America, Chase, thinking that that is a good investment. Or they'll put it into CDs, which is a little bit better, but CDs lock your money. So a CD is a certificate
of deposit. Yeah.
And there's so many benefits, but again, we'll get into benefits and also not so great benefits.
Yeah.
But again, personal finance, personal choice, different people have different ways of investing it. But did you know there's banks like high yield savings accounts that are offering you?
They could offer you anywhere between like 4 to 5%, just depending on the bank, right? One that I use is Ally Financial. With them, they offer 4.4%, but the account type that I have is called a money market. The good thing about that one is that they give you a debit card, right? Okay. So it's like a completely online bank. They're based out in the East Coast, but with that one, right, I get 4.5% just for leaving my cash in there. And then if I ever do want to pull it out, because typically with a savings account, they don't give you a card. So that money market, they give you a debit card that you can use instead of trying to do like a transfer online, which takes like about 3 to 5 business days. You have that debit card.
And I think that's where a lot of people are like, oh no, I want my money now.
Yeah.
And that's probably why they stay away from high yield savings accounts.
Yeah.
But it's like you're missing out on so much money. And just to give you guys a little bit of an example, I have Wells Fargo savings account, and I also have an American Express high yield savings account. The difference is Wells Fargo was giving me 0.15 percent annually, right? So annually, that means I'm gonna get 0.15% out of the 15,000 on an annual basis, but they're gonna pay me monthly.
Yeah,
sort of like a dividend, you know, sort of. Versus American Express was gonna pay me 4%, right? And you're just like, all right, but what is that difference in money terms? Dímelo en dinero. Like, how much am I making, or how much am I losing? These 15,000 that I had with Wells Fargo, and these are real numbers, by the way. So yes, I have 15,000 in my savings account because of an emergency. They're right there.
That's right.
A month, I was getting $1.25, $1.25, and people are like, and so many people are like, hell yeah, making money.
Yeah,
which is great. Good for you. $1.25, that's $15 a year off of your $15,000. Hell yeah, probably.
Yeah.
If I do my math back then, I would have been like, well, now I need to have $150,000 so I can get $150 a year. All right, cool. So if I would have known better, and I would have known about high yield savings accounts a lot sooner, and again, there's different ones. And for the sake of this podcast, American Express, 4% at the time, interest rate. Those $15K gave me $50 a month. So that's $600 a year. $600 a year. We're talking about $585 difference a year just by having my money there.
That's a no-brainer. Like, just make the switch, right? I mean, the numbers don't lie. Again, it sucks that it's not pushed out as often, right? Because everyone thinks, oh, the big banks.
Yeah, they're safe. They're
I mean, the only thing too is with these online banks, these smaller banks, make sure they're FDIC insured, right? That way your money is covered. It's good to have a bank that's that covers if your funds if anything were to happen. But at the same time, you could get a lot of money right now, a lot more interest just for having your money parked in one of these accounts.
Yeah. So let's talk about, okay, why aren't the banks giving me that rate? And what are they doing with my money then? Because you think your money's just sitting comfortably at a bank. It's not.
Yeah. So basically, with the banks, right, how they typically make their money is your deposit that you have in the bank account, they use that, right? At least off the top of my head, I think it's like 90%. And they invest it, right? So that's why, like, if there was a bank run, meaning like if everyone were to go to the bank and try to cash it out, they're like, oh, we don't have that much money because your money's invested.
And it happened in, which one? Oh my God.
I think it was SVB Bank, right?
Yes,
Silicon Valley Bank.
Silicon Valley. So many people obviously started tanking, and people were like, I want my money now. And they're like, well, we haven't invested. We can't give you your money right now.
They had it in, I think it was like some bonds or treasuries or something where they couldn't just like, sell it out.
No, because like I said, there's different types, and we can get into it in other episodes where it's locked in.
Yeah. That's the downside to certain, accounts that some of these banks offer. Like I know you mentioned CDs, certificates of deposit. Those, they offer a higher interest rate, but you're locking up your cash. I personally don't use it. I know some people do use them. Again, it's all personal preference. But the way I see it is, a certificate as depreciation, right? Because inflation is constantly going up, especially if you have to lock in your money. Let's say you lock it up for 2 years or 3 years. It's like, who knows how interest rates are going to be? I mean, right now it's high, so I'd rather just put it in a high yield savings account. I could pull it out and use it for whatever now.
Yeah. So these banks are using your station money. They're charging you 19 to 21% off of your credit card. So they're taking money away from you. They're investing it into maybe, like you said, bonds, maybe all these CDs. So when you're making $15 a year off of your 15K, out of your 15K, they're making $600 a year. So they're keeping $585 from you. Imagine that. And it's like, well, those could have been mine.
Yeah. And again, it's just all having the knowledge and information, right? There's always ways to make money. It's just about getting exposed to it, right? Kind of like back to the money mindset and putting yourself out there. The more exposure that you have, the more you put yourself in those situations and ask, the more you'll be knowledgeable about it. And all it takes is one person, right?
Yeah.
If you learn about it, I'm pretty sure you're going to share it with someone else. Like, hey, I got this bank account, 4% interest. This is how much I'm getting. You should
that's
do it
how
too.
I got my brother into American Express. And he doesn't invest in stocks because he doesn't understand it. Even though my youngest brother and I do invest in stocks. The middle one is like, it's too complicated.
Yeah.
But he understands the high yield savings account, and I got it. I made him get it, and then he saw, oh shit, he invested $1,000 and he got like $1, and he's like, oh shit. And then the next month,
and
he
then
saw
it's like,
that,
oh,
he's like, I got
$1.20.
It's going up.
Yeah.
So now, but he has a notion of it.
Yeah.
I had a question for you. Do you pay cash or do you pay card, like credit card?
Oh, when it comes So with me, I never use a debit card for anything, right? I always use my credit card. And then let me kind of like elaborate on that. So if you use your debit card, right, and let's say fraud happens, they take your money out, the bank is going to they're going to do a whole investigation. It's going to take like 30 days for them to see what's going on, right? So you're out of that money, right? So it's not like, oh, they're going to give it to you right away. They got to investigate. Imagine if you have rent or your card payments, like, shoot, where the hell am I going to get this money?
Yep.
Right? That's one reason. The other reason is with a credit card, I get points, right? I get rewards. I make money off of it. And if there's fraud on it, I just call the bank and they're like, oh, it's fraud. Okay, boom. Credit my account. That's their money. I could care less, right? I mean, they're going to investigate. They're going to get it back majority of the time. But if it's my money, again, it takes like 30 days in order to get it. But I never use a debit card for anything.
I completely agree with you on that. The only reason, like the only way I'll pay debit card is if the person that I'm paying is like, oh, I only take debit.
Yeah.
And I'm like, oh, well, fuck you.
Yeah, I was like, I'll just pull out cash then.
Yeah, no.
I never use it. I don't even carry my debit card in my wallet or anything.
I just carry my credit cards or they're all on my phone already programmed. But one thing that I was going to say is I like to travel a lot. And sometimes flights get canceled and stuff happens that you have to cancel your hotel. If you pay with your debit card, like you said, and you call the airline, and it's happened to me, like, yo, Volaris, my flight is canceled. Oh, we can't give you back your money. Like, you didn't get the insurance on the flight. And you're just like, what the fuck?
Yeah.
But I missed my flight because you guys, or something happened.
Yeah.
X, Y, and Z. Well, we can't give you your money. You didn't insure it. Oh, hell no. So, but if you had a credit card and you paid it on a credit card, you don't even have to talk to Volaris.
Credit cards are beautiful. And a lot of them have certain perks. Like, I get DoorDash, like the premium version, for free based off my Chase credit card. So, like, the delivery, all that stuff's like
I get
free.
Uber.
Yeah, so like there's a lot of benefits in them, right? Because the banks, they make money off the transactions that you make. So every time you swipe it, they're charging the merchant a fee, and then that's how they make money, and that's how they're able to share some of it through like rewards and stuff. Yeah. So I never use a debit card.
Favorite or high yield savings accounts?
High yield saving. My favorite is gonna be Ally Financial, right? Okay. Not only that, I'm an investor, right? I own their stock, so why not go with them? You know. But yeah, I mean, I've had them for a while. They've always been good. Their customer service is like off the top. It's not like overseas or anything. So every time I call, 24/7 support. They're always there. They, fast to respond anything. So I mean, that's my personal favorite. I always tell people about them.
I had a great experience, and I have American Express. That's who I have for my high yield savings account. But as an investor, I also have Apple stocks, but I also have their high yield savings account. So if you have the Apple card, what's so cool about it is obviously Apple is incentivizing you to use Apple Pay. And what's Apple Pay? Well, you have to have an iPhone, right? But every time they also give you a physical card. But every time you use the physical card, it gives you 1% cash back of that purchase, and it goes straight to your high yield savings account. So if I have $100 and I swipe the card, 1%, so $1 goes to my high yield savings account. Now, if I use Apple Pay, it's actually 2%. So they want to incentivize you to use Apple Pay because obviously that means you have an iPhone, right? And then there's certain things like if you use it on Lyft and if you use it on Uber Eats, then
you
it's
get a
3%.
higher percentage.
Yeah, 3%.
What's their
4.15.
4.15.
So 4.15.
Yeah, that's actually pretty good. Anything over 4% compared to like the big three, right?
Point 1.
Yeah, 0.15%.
It's not even a whole number.
Yeah, it's not even a percent. That's like... I mean, that's a no-brainer. Like after this episode, I think everyone should go and look into a high-yield savings account, open one up.
Yes, and just start transferring automation, just like episode 1 and 2, automation. $10 a week, $20 a week. All right, so we covered high yield savings account. I still want to stick with the banks because there's different smaller banks that I love, and I also have. So I said I have Wells Fargo, I have American Express for high yield savings accounts. Another savings / brokerage / bank that I love is Charles Schwab.
Yeah.
Charles Schwab is a brokerage, so you can invest your money there. It's also a bank. But one thing that I love for everybody who's traveling is every time you go to an ATM, you get like $3, $4, or depending on where you are, a fee for pulling out money, right?
Ah.
So with Charles Schwab, you can put money in there, use that debit card internationally, and you say, yeah, I'm going to pay the $4 transaction fee. Transaction fees are reimbursed at the end of the month.
Cool.
Yeah. So
Yeah.
so when I'm traveling, it's like, well, I just know I have to transfer money to Charles Schwab. And if I pull it out in an ATM machine anywhere in the world, they're just going to reimburse my ATM fee.
Dang.
It's like,
Yeah, I wouldn't even know that. I don't even travel like that, bro.
well, I mean, I didn't know. So shout out to Emmanuel, who is my best friend. He traveled a lot and he did his research, and voila, he wasn't lying.
Yeah.
Yeah. And then what other tips and tricks can regular people do? What was I going to say? To take advantage of their current banking situation, like overdraft fees or service fees.
I think, yeah. With that is like, you have to, one, find like another bank if it's for like savings or something, right? Find one that doesn't charge you anything. Cause I know like with Chase, I have to have at least a minimum of like $300. If not, they're going to charge me, per day or whatever. And I'm like, what the heck? Like, it's a savings account. Why wouldn't you guys want my money here? So that's another thing, like about these other banks or smaller banks. A lot of times they don't charge you fees. Yeah, there's no fees. There's no minimum requirements. There's no like, oh, you have to do X, Y, and Z in order to get the interest, right? Some of them are like, oh, you need to have $10,000 in order to start getting interest. I'm like, what the heck? So all these, you get it from the jump. I know Ally Bank right away. I could put $5 in there. I'm still getting that 4%. But in order to kind of like combat those fees, you really have to, just do your research. I think a lot of these big banks, that's how they make their money. And it sucks because it's like, dude, I barely have money and you're already charging me more and more compared to like the people who have money in there. It's like, dude, I'm already overdraft. I'm doing all this.
So my first bank ever, and I will never go back to them even though people have Bank of America. And the reason why, I had a really, really bad experience. So obviously I was 18 years old. I got Bank of America. That was my first bank, yada, yada, yada. And I had like $34 or something. And I didn't know. I went over... Oh, how was it? Fuck. I got an overdraft fee.
Yeah.
Of like, $35. And then because the overdraft went over $1, I got another overdraft fee.
Yeah, it's like $25 or something.
Yeah.
I know at Chase it was like $20.
And it was just, basically I got charged triple. So like I literally
what the heck?
left. But anywho, going back to your point where you have to have a minimum amount in order not to do like a service fee on a monthly basis. I have Chase for my business, which is Echale Entertainment, which is this podcast, anything that I do as an influencer or a content creator. But I have to have a minimum of $2,000 in the bank account.
Yeah.
When I don't have a minimum of $2,000 for a 30-day period. So that means even if I have it for 29 days, because I don't have it for 30 days, they're going to charge me $15.
Yeah.
So keep in mind that obviously for anybody who's a small business or a content creator, money fluctuates.
Yeah.
So for like about 6 months, I didn't have the $2,000 minimum requirement on my business bank account. And I got charged $15. So that was about, $90 for, with those things, you can call up your bank and literally say, I want those service fees overwritten or reimbursed. And 9 out of 10 times they'll do it. And if they don't do it 9 out of 10 times, threaten to leave and then they'll do it. Ramit taught me that. Ramit is another book. I will teach you to be rich. I will teach you to be rich.
Yeah, that one's a good one. And a lot of times, same thing with the credit cards. You could call them up if like, hey, as far as like the interest, like, hey, can I get a lower interest rate? Because they rather have you pay for it rather than you filing bankruptcy or doing something else and not paying them at all.
Yeah, so negotiate. I think that is a good way to start negotiating with the credit card company, somebody that you don't see physically, and then you can work your way up to your boss and negotiate your pay there. But anything else that I think that we missed for banks?
No, I think that's pretty much it. But I think as far as like when it comes to your money and if you do set up another bank account, make sure you have a goal in mind. Don't just open it just to open it and then you don't use it, right? Have like a goal, like, okay, this bank that I'm opening or this account, it's gonna be for an emergency fund, and I'm only gonna use this bank for your emergency fund, or maybe like, hey, this is my investment money, right? So all the money that I have here, I'm gonna use it to invest or down payment on the house. Be intentional with your money and what you do, because if you just go through the motions, obviously, it's not gonna end up good, right? So you need to have a vision. You need to have a plan in place and execute.
Eddie, where can people find you?
You can find me on all social media platforms at Eddie the Hustler.
Any questions that you may have, if you haven't checked out the other episodes on this podcast, whether it be on YouTube or on Spotify, Apple Podcasts, make sure to listen to them. I will put them down in the description below, or literally they'll pop up here on YouTube. Make sure to subscribe because we're trying to grow this channel. But until next week's episode on Mastermind, And let us know if you like this, because we want feedback, or what do you want us to go into?
Drop some questions if you want us to elaborate a little bit more. If something wasn't explained well, like, let us know.
And if we're wrong, check us.
Yeah, I know. I mean, like, hey, take everyone's advice with a grain of salt. All the information, do your own research. Like I tell everyone, anything that I give to you, take it with a grain of salt. Like, hey, it might have been true a while ago, but now it's like a little bit different. Always do your own research.
Yeah, so the interest rates that we actually provided to you on this episode, disclaimer, were as of September 16th. They could be higher because the Fed might increase their interest rates as of next week, or they could be, the same, because I don't think they're going to drop their interest rates anytime soon.
Yeah, no,
and that's another topic.
So, but
have fun. Enjoy.